STAKK Nation, welcome back to the channel.
Champions.
In today's episode, we're going to be talking about BlackRock's ETF and its potential impact on Bitcoin.
Spot.
As you may or may have not heard, the noise on the street lately is that Bitcoin or BlackRock's spot Bitcoin ETF is likely to be approved, if you will, sooner than later by the SEC.
That's the rumor.
So today we'll be taking a look at what an ETF really is, first of all. Then we'll take a dive into the possible impacts, be it positive or negatives, that these might have on the financial freedom of everyone. And of course, the attempt to escape from the tyranny that is the current financial Ponzi scheme, if you will, that we find ourselves in. So we'll begin with what an ETF is. As defined, an ETF is an exchange-traded fund. This is a type of investment that aims to track the performance of a specific index sector, maybe commodity or a group of assets. ETFs are traded on stock exchanges generally, unless you find yourself in a black pool. Then there's also that.
If you're lucky enough.
Yeah, if you're rich enough, you can get in the black pool. Now, this is supposed to provide investors with a way to or at least a cost-effective way to gain exposure to a diversified portfolio of assets without having to individually purchase each asset. One of the reasons might be that it reduces volatility on your portfolio, but that is not this video. What is the current situation?
Man, things are getting crazy. Like you said, ETF,
Yeah.
Bitcoin spot ETF. It's very, very important that we ask multiple questions, given the fact that we're gonna be having some new introduction of an ETF, not a spot ETF into the Bitcoin space. We've had the futures ETF, we have the leverage ETF, the two short ETF.
Right.
I think they also approved the futures ETF, which was the grayscale ETF. And now we need to start asking the question, how does an ETF really operate? Because if it's going to be a spot ETF, that means that we have to physically own the assets. I mean, BlackRock will have to physically own the assets if they decide so. Or we also need to figure out the operation and the maintenance schedule of how an ETF works. How does it impact, or if it will impact Bitcoin? We also need to ask the question, BlackRock. Doesn't BlackRock have Aladdin, an AI tool that literally manipulates the entire market? What impact would Aladdin have in the Bitcoin economy? Those questions you should ask as well. And how does the exposure of Bitcoin to a large group of people through an ETF do to you if you own in Bitcoin, do to you if you don't even know Bitcoin, or does to Bitcoin or to the Bitcoin economy itself? So those are the questions we need to ask ourselves, right? So let's start with the first question, right? How does an ETF operate? So let me read this real quick. An ETF operates through the creation and redemption mechanism. So you have to create it, and then you gotta be able to redeem it. So again, this is a fundamental process that allows authorized participants, usually large institutions, investors or market makers, to create or redeem shares of an ETF. Again, if you read that line, you already start seeing the major points out there. Authorized participants, large institutions, right? When creating new shares, authorized participants assembles a basket of underlying assets that the ETF is designed to track and exchange them on the ETF, on the exchange basically. Conversely, when redeeming shares, the authorized participants returns ETF shares to the fund in exchange for the underlying assets. The mechanism helps ensure that the ETF's market price remains closely aligned with the net asset value, which is the NAV, of its underlying assets. So to basically simplify that, right? If you read that definition, it's telling you that number one, it has to be an authorized person, so which is literally not what Bitcoin is about, right? They control the buying and selling of Bitcoin. It could be a physical or synthetic, whatever, but they control the ins and outs. Yeah. But it also says that it has to be a group of assets. So if it's a spot Bitcoin ETF, it's going to be what? Bitcoin and what else? because there's only one Bitcoin.
Yeah.
You can't call it a spot Bitcoin and mix it up with Ethereum.
Yeah.
See what I'm saying? So these are the questions that we should be asking ourselves: is that it's a spot ETF. So if it's a spot Bitcoin ETF, what is going to be added to that Bitcoin? Is it going to include maybe MicroStrategy? Is it going to include other Bitcoin related stocks like the mining companies, Hot 8 and the rest of them? Those are the questions we need to be asking: is that how do you design that Bitcoin ETF?
Absolutely.
So this is some of the questions you gotta ask. But some of the things that comes out as you read the definition of an ETF is the definition, which is centralization. It has to be through an authorized participant. Bitcoin allows you and I to buy without the need of an ETF, without an authorized participant to do that. It also talked about an accredited investor. So some ETFs you cannot buy if you don't have $1,000 or $500. So those are some barriers. So the entry barriers now goes up. So you think that you are getting access to Bitcoin, but you're literally not getting access because you need a lot of money to now get access, when you and I can just go to Cash App and just buy $2 worth of Bitcoin if you want to. So that's something that you got to consider, right? Creating and redeeming shares. They have centralized control of that specific asset. So they do the creating and redeeming. So they work directly with either the miners or whatever. That means the entire time you don't actually own the Bitcoin. They have now converted Bitcoin into some synthetic form of shares, which they buy and sell or trade, right? Then they also track it on the exchanges. I'm sure you guys have heard about BlackRock working with Coinbase to now manage and track the movement of Bitcoin on exchanges. So that's an inner workings that now you no longer have access to. We already have the mempool, right? We have the blockchains. You can even set up your own node and see the transactions yourself. But now they're putting that third party now in the place to now start manipulating the ins and out of so-called Bitcoin. Now the question will be, are those really Bitcoin? We've seen what have happened to Robinhood with what they did with AMC and GME. Those are things that you want to be concerned about. Plus, Coinbase sells your information to the government anyway. So that's something else you got to be careful about. The most important part that you also got to start thinking about is ownership. It's going to be BlackRock's Bitcoin at the end of the day, not yours, because it's a spot ETF that they control and they manipulate. So this is one of the questions that we got to start asking. Do you have any more questions to add to that?
Well, I think in comparison to a lot of the things you have said there, we also have to look at how does this operation or maintenance of a Bitcoin ETF impact Bitcoin, if you will. Now, ETFs can be structured generally in two ways. You have physically backed ETFs and then, of course, synthetically backed ETF, which we could also just refer to as synthetic ETFs, because that means the backing is shaky. So with physical ETFs, the entity would generally hold the actual underlying asset of that ETF, which they're tracking. While with the synthetic ETFs, of course, you just have a financial instrument of some sort that tracks, that indexes performance. Now, the key points of concern and question around this sort of ETF, for one, is when you look at physical versus synthetic ETFs, right? It is obviously rumored that billions of dollars will flow into this ETF economy, if you will, or flow into Bitcoin, to the Bitcoin economy once this is approved. But we're talking about flowing of cash not into the direct asset that is Bitcoin, but into this Bitcoin ETF. And so we have to ask, why is it that way, and why do these people not want to purchase the asset directly? Now, the percentage of how many will be physical, right? We're talking about actual Bitcoin and with Bitcoin keys versus the synthetic is unknown. However, I think we could also say that you could just have the actual keys, like Double already mentioned in ownership, right? Maintaining the ownership of your own Bitcoins, that self-custody. It is important to definitely note that the synthetic Bitcoins will only track, right, the price of Bitcoin. It will not be the actual Bitcoin. So in the event where you need to transact in Bitcoins, what you really have is just a representation of the actual asset. I'd like to remind you of gold. The price of gold today is not even known because it's been manipulated, trashed, and completely controlled by the same people. Now, synthetic bitcoins will make more Bitcoin, or at least make Bitcoin more accessible and liquid than the traditional method. Of course, because they control the supply of that, but it also exposes investors to a number of risks. One of such risks is counterparty risk. You see, a synthetic Bitcoin is created by a third party, wherever it might be. BlackRock, maybe it's created by the AI tool, it could also be that, which means that investors are exposed to this third party risk. And if this third party should default on its obligations, which could lead to investors losing their money, we've already seen this happen already in the crypto space with various entities such as BlockFi or FTX. Well, FTX was outright a scam. The other thing here is the liquidity risk. Now, synthetic bitcoins are illiquid, which means that they can be difficult to sell depending on what is going on. This can make it difficult in the situation of maybe a price dump for the owners to exit this. Now, of course, we have other risks to go along with this as well.
Yeah.
Double up.
Yep. One of those risks is pricing risk. I'm sure you guys have recently seen the big divergence between a Coinbase Bitcoin price versus a KuCoin versus what's his name called? I'm running a blank on his name. The biggest exchange.
Yeah.
I'm running a blank on his name right now. I've not used it in a while.
I cannot remember it right now, but just carry on.
So yeah, you can see the difference in price in price risk. So if BlackRock, for example, is getting their information from Binance, that's the name, right? Oh, okay. And Binance happen to have some kind of systemic issue that could create a serious, not to Bitcoin, but to the price. So there's a disconnect between the price, and that could cause a major spike in the price or a major dump. You guys have seen a couple of times where you just see a very quick line on the stock market, a quick dip while you're pulling a put option or a call option. Those will happen in the spot Bitcoin ETF.
Absolutely.
Then there's the regulation risk. Everybody's saying Bitcoin should not be regulated. Bitcoin cannot be regulated. Bitcoin itself cannot be regulated. Bitcoin in the spot ETF as an exchange can be regulated, which, as Brazen just said, if majority of the BlackRock ETF, spot ETF, is synthetic, right, then they could have some kind of ways to indirectly regulate Bitcoin. You have to understand, this is a strategy here. How are they implementing that strategy? Those are the things I should be keeping an eye on. Why are you not buying the Bitcoin? Why are you buying it through an ETF, which has all these limitations? Which then goes to the next one, collateral risk. So let's say, for example, which a lot of people do on KuCoin or sometimes on Binance. I'm not sure if Binance does that anymore. You can put a lot of collateral and say, you know what, I'm going for a call. And you're trading Bitcoin instead of holding Bitcoin. And if for some reason the price of Bitcoin falls, not only do you lose your investment, you also lose your entire collateral, which now I think is one of the examples of what happened to the Celsius and those guys was that they had a heavy bet in the bull market when the market was going bearish, and that they could not find the funds to pay up for the collateral. So they not only lost their investment, they also lost the entire collateral. So those are things you gotta watch out for. And there's one thing called an oracle risk, right? This is common with synthetic assets where, in the space, in the blockchain space, it's typical for people to say, you know what, I'm going to get a third party. Just like you borrow somebody your money, right? You borrow somebody your Bitcoin. They do all the magic with it. And for some reason, within that oracle, within that third party, you don't know what's going on there. You cannot rely on them. And then they blow up the money. Does Alameda Research make sense? Because Alameda blew up a ton of money for FTX. That was what you call an oracle risk, where the oracle loses the money and now you lose your entire money. So you gotta be careful of that. And then there's the smart contract risk. This is when they start bringing DeFi into the space. You've seen what happens with SushiSwap, and all the pancake swap and all those guys, right? Be careful of smart contracts. They can be broken. They are code. Somebody always have a backend into it. And now the rumor will not be, oh, somebody hacked into Bitcoin. No. Bitcoin did not get hacked. It's the smart contract that BlackRock or whoever created got hacked. Bitcoin cannot be hacked. So these are the things that you get us to asking questions about.
Yeah.
How is this going to operate?
It seems like a path to stupidity. More stupidity. It's almost like Ethereum happening all over again. But this time around, it is Ethereum running on Bitcoin. As we know, we've spoken about, BlackRock, Ethereum running on, you get where I'm coming from. Now, of course, we spoke recently about Aladdin. Aladdin is an AI tool, an algorithm, right? Owned, managed, and run by BlackRock that totally controls not just the markets, but the Federal Reserve as well, as it has been admitted in some writings that we've come across lately. And I'm sure it is no doubt that BlackRock will probably be aiming to implement Aladdin into this ETF situation as well. After all, it seems like one of their most massive investments. Now, implementing Aladdin in such a situation will no doubt have a wide range of complexities to go with it. From financial engineering risk to counterparty risk management, the Bitcoin economy is also impacted, as we know, by macroeconomic factors. Bitcoin is not just tied down to one country. That's why when we also talk about regulations and people in the US speak about Bitcoin being regulated, you also have to ask, regulated in what scope, at least in what realm? Because outside of the US, Bitcoin is still functioning, and I don't think that we can write regulations for China or Russia and so on and so forth, right? So then, since it's impacted by these macroeconomic factors, then we know that BlackRock's AI, which has clearly been around for a while, would need to be at least regenerative to be able to adapt to these constant changing global macro events that we see. It would also need to constantly adjust the bid-ask prices to keep the ETF's market price in line with the NAV, right? It would also need to become the market's maker and manage spreads, arbitrage opportunities, and market volatility to ensure efficient trading. Seems like a tall order, and I think there'll be a slew of missteps coming up in the near future as they try to implement, or when they try to implement this into the Bitcoin ETF, and at least try to mess with the Bitcoin market itself, right? The AI will need not only to pass the market events, but the current ones as well. Now, talking about having this exposure to Bitcoin without purchasing it directly, what are some concerns on that side? Develop.
I think the question we should be asking is, are you ready for liberation from the Ponzi schemes that we are in?
Yeah.
Or are you just concerned about making profit and how the Bitcoin spot ETF will be impacted by your Bitcoin price action? Like, you just want Bitcoin to go up, right? Because that's not what Bitcoin was about. Bitcoin was created as a decentralized peer-to-peer electronic cash system. I'll repeat that. Created as a decentralized peer-to-peer electronic cash system that is not subject to government control. It's not subject to BlackRock. This means that Bitcoin can be used to store value, for you to store your money, and make payments without the need for a third party. So why do we need the Bitcoin spot ETF? Anyway, let's continue. A spot ETF would give BlackRock control over what Bitcoin's perception around the world is. Because remember, BlackRock owns the world.
Right.
Bitcoin is for everybody. So there is the owner and there's the everybody, right? BlackRock is a very large investment firm. They control the media. They control the financial systems, right? So their interpretation or their definition of Bitcoin would most likely be what most people adopt over time, So for those early Bitcoiners, will become the very few that actually understand the real use and purpose of Bitcoin, which is why we do what we do now, which is why we're doing this video, is to make sure that you understand the initial purpose of Bitcoin versus what a Bitcoin spot ETF is. They would influence and promote Bitcoin as an investment vehicle. I will repeat, it will be promoted as an investment vehicle. When Bitcoin goes up to $100,000, they will say it's the best investment ever. And that you should get a BlackRock spot ETF because it's going to make you a ton of money. Not that you should get your own Bitcoin. No, get a Bitcoin BlackRock spot ETF. And rather, it would not be a currency or your liberation from the tyranny. It's going to be about profits, which they control with their AI tool, as Brazen just said. It could be used as a speculative asset. People say that Bitcoin is speculative right now. Wait till BlackRock takes over. You will be smiling. In addition, not only would BlackRock be holding your Bitcoin for you, you will not hold your own value. This is why Bitcoin was created in the first place. For you to hold your own value without inflation, without taxation, without regulations, store your own value, be a sovereign human being. But no, not with BlackRock Spot ETF. You will buy it and you will be happy. You will own nothing and you will be happy.
You'll be happy. Poverty forever.
Boom. This will mean that investors would not actually own Bitcoin, but instead you will own synthetic shares. This is even worse than stock market.
Yeah.
On this stock market, you could claim that you own a share of a company, but no, this is proof here. Kind of like fiat money.
Yeah.
Fake money, fake paper, you have fake Bitcoin and you will be happy and you'll be fighting so hard for it. This will create many counterparty risks. We've talked about the different risks earlier on. And if any of those risks occur, you're going to see a major dump in price, in the Bitcoin price. Again, sovereignty, liberty versus profitability. Those are the things that you should start thinking about. For this reason, there is the positive and the negative. It all depends on which angle you're looking at it. If you're all about money and want to stay in the fiat system, stay slaving, definitely do what you got to do. But it's very important to understand that BlackRock would control Bitcoin from their angle, especially given the billions of dollars that they will bring into the market space. But the initial objective of Bitcoin will still be there. It is a peer-to-peer electronic cash system for us to exchange value and trade with one another. And the spot ETF, with the strength of the fiat system of the governments, would come and try to change that. And it's really up to you at the end of the day.
Absolutely. Well, I think, again, we must always ask ourselves, because obviously when you buy a stock, you are buying a share of a company. But when you buy Bitcoin, I think you are buying freedom, sovereignty, and much more. So you also have to ask yourself, why are you trying to buy your freedom and your sovereignty through an asset and through a company that seems to be against all of these things, aiming for full control? The choice is yours. Some people like to be controlled as well. So even though there's a high chance, I'll also add there's a high chance that this spot ETF will lead to another Bitcoin fork. One of the reasons to say this is because in their own description of this ETF, there is mention of them picking which fork to carry your money on with if there is a Bitcoin fork. This means, let's say a Bitcoin Satoshi Vision or one of those other Bitcoins out there was part of this hard fork and BlackRock made the wrong choice. Let's say they went for Satoshi Vision instead of the real Bitcoin. Your ETF is now Smoke TF. All right. So with that being said, then, ladies and gentlemen, definitely some things to consider. We hope this video was informational. Well, it's informational for you. We hope you found some value in it. Let us know in the comments what you think. Is this Bitcoin ETF something you have looked into? Is it something you're considering purchasing? Can't wait for it. waiting to jump under the protections of Gary Gensler. We would like to talk about it in the comment section. Any final thoughts, Double Up?
At the end of the day, it's really up to you.
Alright, sounds good. Well, until next time, ladies and gentlemen, we're going to be signing off here. Do not forget to like, share, subscribe. Follow us on our social media pages as well. Okay, we are on X, formerly known as Twitter, as STAKK, and of course we are also on Spotify as STAKK. Share the video with your friends. Until next time, brazen out.
Champions! Double O out.